Good morning, ladies and gentlemen. Welcome to the show. Really glad to have you guys here. Now, the first thing I want to talk about is the crisis that's up and coming. And this debt crisis has to happen pretty soon because of the world's amount of debt that they've created. They've over-leveraged the system. And when the system is over-leveraged, what happens is it starts to shrink. And when it shrinks back, it deleverages. So we got Europe is going to be the epicenter of this crisis. Now, I'm going to talk about the United States in a little while after we get things going and I went through the markets. So the first thing we're going to do this morning is we're going to open up the charts right here. We're going to take a look at what's going on in Europe. Italy, you know, is at the center of the European crisis that's going to unfold. Now, Theresa May, she may have good interests at heart by the European Union when she worked through this deal that she created, but it's not. She didn't do a good job on the deal, and the evidence of that is the fact that it's went through Parliament 3 times and they voted it down 3 times. The whole thing just smacks to me, and the feeling that I get from it is that the European Union likes the idea that the United Kingdom is being punished for trying to leave, you know, and they do not want a French exit. They do not want an Italian exit. Brexit is enough, and they're going to show what happens to you if you try to leave the European Union. And it's a desperate attempt for them to try to hold the European Union together. Meanwhile, they have internal problems in the European Union, and one of the hugest internal problems is Italy itself. Of course, you know about what's going on in France. You know, that's internal problems as well. But Italy, the banking system is completely, basically more than broke. They've borrowed money from all the countries around them, including France. And now, so look at this article. It says, Eurozone crisis, Italy's bulging debt is a huge threat. Alarm bells ringing in the EU. Well, they've bottomed off for a few months. 41 billion euros worth of Italian bonds. And this will hold Italy for a few months. At the way they're ringing up debt in Italy and the way the debt is growing in Italy, it's probably going to last about 3 or 4 months. And that was about a month ago. And then what are they going to do? They're going to have to buy more Italian bonds. This is what's keeping the Italian bond yields very low. Did you know that competitively, Italian bond, which would you rather have? A U.S. Treasury bond or an Italian bond? They're very competitive in price. So which would you rather have? Well, the Italian bond is not worth the paper it's written on. So why is the yield so low on Italian bonds? You know, I mean, the yields should be 99% of something that's worthless, you know, worthless paper. Instead, the yields on Italian bonds are like 2% or whatever. It's ridiculously low. Anyway, let's move on and take a look at the silver price today. Now, what we see here is $15. It's been slowly inching its way back up like an inchworm. I better open up the charts a little bit bigger here so you can see. It's at $15 right now. It's up 6 cents on the day. Slowly easing itself back up into its range that it was in, at around 15.15 or 15.20. Let's take a look at gold today. It's inching its way back up too, but it's down. It says 70 cents, but the tendency is today for them to inch their way back up. $12.91 on gold. I wouldn't be a bit surprised to see in the next few days gold go back up around $1,300. Wouldn't surprise me any. Let's take a look now at Bitcoin. Bitcoin is 50.51. It's inched its way back up. It was down below 4,000, I think. 5,000. And it's inching its way back up again. It's at 50.51. And cryptocurrency market capitalizations today. We see that the market cap has dropped back. It was up above 180 billion. It's 173.3 billion with a Bitcoin dominance of 51.8%. And we see all the coins inching their way back up today. Not up to what they were, because Litecoin was up to like $93, and now it's $80.10. Bitcoin here on this chart says a price of $50.91, and we're looking at Ethereum at $166.10, XRP at 32.9 cents, Bitcoin Cash at $286, and EOS at $5.41, Binance Coin at $17.97, Stellar is at 11.5 cents, Cardano is at 8.5 cents, and Tron is at 2.7 cents. So those are your top coins today. What I think is going to happen in the cryptocurrency market is, I notice that the cryptocurrency is not so much related to the stock market now. It looks like it's more related to the price of the dollar and gold. It's kind of following dollar and gold. I've seen that tendency just recently starting to develop, that that Bitcoin and gold, the gold price, have been kind of moving a little bit together, and I'm keeping my eye on that, and that's an interesting development. I think that cryptocurrency, Bitcoin, is making a transition now. It just started in the last month or two. This transition is a transition between it being a speculative investment and becoming a digital asset that is a safe haven asset. Because there's very few safe haven assets out there right now. Investors don't feel safe. They're looking for places to put their money where it's going to be safe. You know, and they do want yield and return on their investment. Now, let's take a look at the Dow Jones Industrial Average today. Well, okay, hold on a second here. We got to give this 5 more minutes. It hasn't opened yet. Let's take a look at the oil price today. Oil's up 98 cents. Now, if you remember, I explained yesterday that I thought that the oil was going to start to bounce back a little bit. And I gave the reasons why, is because there was a upside in the amount of crude oil inventories, but there was a downside in the amount of gasoline available for, like they were low in the amount of gasoline. Well, of course, you know, the refinery changes the crude oil into gasoline, and they were down, I think it was 7.7 million barrels of gasoline down, low inventory, and they were up in crude. They had like 7 million barrels of crude that was in excess. But that 7 million barrels of crude, when you convert it over into 7.7 million barrels of gasoline, it's gone. Poof, gone when you refill the gasoline inventory. So I think that's what it did was it transferred from one thing to another. Basically, from crude oil, it's transferring through the refineries into gasoline. And because of that, we don't have an excess supply of oil once you take it away to make gasoline with it. And so I think that's what's happening, and the crude oil prices responding. Plus, you got OPEC pushing this market. Don't underestimate the power of OPEC in their cuts in crude production. So between that, what we have is we have a very slowly rising price of crude oil. And I think this actually could continue. Let's take a look at U.S. Treasuries today. We're seeing big moves in the Treasury market today. These are big moves. These are big numbers. 5 basis points is big numbers. We're looking at the 7-year with 5 basis points. 5.4 basis points on the 5-year, and 5.2 basis points on the 3-year. Treasury yields are rising today. This means that basically they're not buying bonds like today. Like you know, they were buying these bonds up and driving yields down, but now nobody's buying, and these bond yields are rising today. Rising quite sharply. I'm noticing this is quite a sharp rise on the long end of the yield curve. Except for the 30-year, it's only 2.4 basis points. But the 10 years rising big, 7 years rising big, 5 years rising big, and the 3 years rising big. And the short end of the yield curve isn't moving much. It's that long end of the yield curve up to the 10-year. And this is where the yield curve inversion is a lot. So this is tapering back on that yield curve inversion today. Let's take a look at the U.S. dollar index today. And the dollar's falling off too. It's fell off to 96.77. It's down 0.40, which is almost half of a penny. You know, it's fell 96.77. So this is having an effect on gold. Gold should start to move as long as this dollar continues to drift downwards today. Gold should start to move. Let's go back to gold. Gold hasn't moved much, really. In fact, it's down 80 cents. If that dollar keeps moving down this afternoon, we could see a pop in the price of gold. So now let's take a look at the Dow Jones Industrial Average. It should be open. Well, we still got 1 minute. Gosh darn it. Well, I'll talk about something else here just for a minute while this market opens up and we get to see what is happening with the Dow today. Here's the thing. Right now we got 500,000 homeless in the United States of America. Now, I did a show on future predictions, looking out maybe in my prediction about the homeless, I was looking out 3 to 5 years into our future. I see that number going up from 500,000 homeless people to anywhere between 5 to, say, 20 million. 5 million being a conservative estimate. So that's 10 times. 5 million would be 10 times what's out there now. It could go as high as 20 million homeless in the United States. But I think that most of these homeless people are going to be on social programs that the government is going to have to put in place. And so I don't think there will be any real starvation. It's just that they're not going to have any place to put them as in a home. You see? No homes. Homeless. That's why they're homeless. They haven't got a home. And they're going to form these camps and stuff around the United States. These camps are going to be so large that they're not going to be able to move the people out of the camps. They're going to have to leave them there. It's basically almost like a designated area within the United States, probably near the large cities. It's going to be something that just people accept. The people in the United States, the people that live there, are just going to basically accept it as this is what it is. Just like they accept it now. They accept the 500,000 homeless people. Well, there's just going to be increased numbers, more of them. But I don't see probably any starvation or anything like that coming to the United States. But Europe, different story. In Europe, I see a different story happening. As the European Union starts to fragment and fall apart, there could be actually starvation in Europe. I know that might be shocking to hear me say that. But this fall apart and breakup of the European Union and these countries that are in the European Union now going back to being sovereign states again and using their own currencies and not using the euro, and the breakdown of the euro itself, the confusion that's going to come around this is going to be the epicenter of the actual world crisis that's coming. Is going to be in Europe. Europe is going to get hit the worst. Worse than the United States. It's going to be worse. It's going to be a worse picture. The United States is going to cope. I mean, you might get a swelling of the homeless, maybe 10 times, maybe 20 times as many homeless as there are now. So you're going to see them. But life's going to go on. I mean, I don't think that we're going to have the kind of disaster in the United States where the system actually shuts down and you can't get food or water. I think you're still going to be able to get food and get water if you got the money to pay for it. It's going to be much more expensive than it is now. You know, and part of the reason why it's going to be so expensive for food and water and things like that in the United States is because these homeless people are going to be, this is the next move the government's going to make, is in social programs. Right now they're trying to cut back social programs. They've got a way of thinking, because the crisis hasn't happened yet, they've got this way of thinking, well, we're going to cut back on our budget, we're going to balance the budget and stuff. All of that's going to be blown out the window at a certain point. And they're just going to extend the budget as far as they need to extend it. They're just going to continue to borrow money. And the debt is going to rack up higher and higher, and people are just going to ignore it. Basically, they're going to lower interest rates down to zero or perhaps even negative. And if they lower interest rates negative, then the United States is earning enough money the more debt they have. Why not? I mean, there's endless to the amount of money that they can create. They can create as much dollars as there are leaves on the trees. And this is the only direction they're going to be able to go in, ultimately, in the end, is money creation. And they're going to use that money. They're going to have to use that money to support the homeless, or they will have homeless, starving people and stuff, and there will be uprisings. They're not going to go that way. They're going to support the homeless. They're going to increase the social programs. At a certain point, it's going to become vogue in the government not to shrink social programs back, but to expand them. So the way of thinking of the government is going to entirely change. And from cutting back on social programs and trying to conserve money to just all hog and actually become vogue in the whole world. It's going to become vogue to promote social programs at that time, at that particular time. And these social programs are going to be like they're going to try to be set up like a safety net. And in fact, they will be a safety net. They're going to stop the starvation. There won't be starvation, but there's still not going to be enough money in the social programs. They're always going to underscore the people where the people just don't have enough money to really get back on their feet. They've just got enough money to feed themselves. This is the way the government is, and this is the way it's going to work. And it's very likely to keep people from leaving the workforce and joining the social programs to try to eke out a living. They're probably going to have to keep the social program relatively low in the amount of money they provide, because if they give the homeless more money than the people are making at their jobs, the people are just going to say, "Hey, I'm quitting." So they're not going to do that. They're going to keep it lower than what you'd make at your job. Probably another incentive to keep people at their jobs is they're probably going to give it for everyone. That's why they call it universal basic income for all. So they're probably going to add it on top of your job at work. So that way they can keep the people working, because it's an added incentive to stay at work, because you get your regular paycheck, plus you get an extra little bit from the government that's going to come in from the social programs. They're going to hit a point in this down the road a little ways where they don't really care anymore about how big the debt is. They just have to keep the system going. And this is what they're going to do. But this is what's going to create hyperinflation. Ultimately, it's like a disease. It's like a cancer. Once they embarked on this program of quantitative easing, you can't quit. You can't stop it. You go to quantitative tightening, you start to try to stop it, and what happens is the market blows up. It's just a simple math. So let's take a look at the market today. They've eased back on these programs now. They're stopping them of quantitative tightening, and they're going back. They're on their way to going back to quantitative easing. What's the market doing? It's up 243 points. Ultimately, once they open the floodgates of money, there's no end to how high this market can go, but the dollars are going to be priced in hyperinflating dollars. You know? And it's going to work the same way for cryptocurrency, gold and silver, which are eventually going to go up massively in price, but it's still in hyperinflating dollars. Ultimately, in the end, as the currency goes into the final stages of hyperinflation, you cannot put a value on gold and silver. It's going to go that high, you can't put a nominal dollar value on it. Because you're talking about paper currencies that are on their way to zero. If you go back to 1913, weigh that to now, the dollar's lost over 97% of its purchasing power. There's only 3% left, and they're going to erode that last 3% all the way down to zero. And then we have to have a financial reset. The question is, what are we going to reset into? I think I know the answer, but we're just going to have to wait and see. Thank you guys for listening to this report, and we'll catch you again very soon. Bye-bye, guys.